Brian Nagel of Oppenheimer. Let's discuss Nike, which reports next Thursday. You see promising signs heading into that release. Explain.
Well, good afternoon, Sarah. So I do. The sentiment around Nike has been very negative lately. It's the same story over and over again that investors are worried about some pullback in spending, and that spending pullback catching up with Nike. But if you look closely, there's been a number of reports lately from Dick's Sporting Goods, Academy Sports. They've all talked up, if you will, underlying strength in the Nike brand. The only place we really saw weakness was Foot Locker. I don't cover Foot Locker officially. I watch it closely. I think that's mostly a Foot Locker problem. But look, I think Nike's faring quite well here. I think they've got a great brand. I think you've seen a lot of innovation in the brand. And I think underlying, while there are definitely points of weakness in consumer spending, I think overall the consumer is actually in pretty good shape here in buying products like Nike.
I think the concern around Nike this quarter in particular is that, first of all, inventories might still be bloated and the China recovery might be bumpy, which has been key to the Nike story.
I agree. Those that's what we'll be watching. So it's next Thursday night, Nike's reporting. And those 2 points you brought up are exactly what we'll be watching. But look, from an inventory perspective, everywhere I look now in this athleisure channel, inventories have really been cleaned up. And if we go back to Nike's last quarterly report, I think Nike's inventories are basically back in balance. So I don't think inventory is an issue. Look, China, that's more of an unknown. I don't know if anyone has a great read. But what we've been hearing from Nike and others is that as the Chinese economy has moved past the COVID crisis, you're seeing more activity there. So I think to the extent that Nike comes out and shows sequential improvement, or at least talks to sequential improvement, that's a positive for the stock from here.
What's the stock been doing, Mike?
It's right in the middle of its, let's say, one-year range. I would argue it's holding up relatively well, considering if you look at calendar year consensus earnings for the current year, we're talking about 2021 level of EPS. That's just, consensus, not using the fiscal year. And so it shows you that there has been this reset on profit expectations. It's maintained most of its valuation. I think it has that quality bias that people want in the market right now in the consumer area. So it's hanging in there. And I do think it's all about getting some kind of clarity as to whether there's going to be a little more of an upswing in terms of demand and clearing of the inventory.
Also reminds me that we got, Brian, and Wells Fargo downgrade from Under Armour today. They cut the target to $8 from $12. Obviously a totally different story. And Wells says a self-help story where we wait to hear from the new CEO and see what the plan is for a turnaround. But who's gaining share here? Because Lulu's been on a really strong run in terms of performance. Nike seems to be firing on all cylinders. What's happening with the rest of the group?
I think you summed it up well. Lulu's been performing remarkably well. After every quarterly report from Lulu, basically the message is what recession? there's just nothing to suggest in those results. Nike's not far behind. Nike's a bigger company. It doesn't grow as fast as Lulu. Under Armour, I like Under Armour. I think that there's a repositioning story that's happening. It's going to take time. Like you said, Sarah, there's a new CEO. I think she laid out a great plan. It's just going to take some time here. So arguably, Under Armour is probably donating share right now at some level to Nike, maybe even Lululemon.
Brian, thank you. Good to talk to you ahead of those Nike results next Thursday. Brian Nagel.